Hey guys, it is Ray Campbell. It's September 13th on Friday. I want to give you a market update and we're going to talk about a bunch of things, lots of stuff happening, of course, recently, and we're starting to see a lot of good movement in the market for interest rates and, housing starting to move a little bit. Refinances, of course, are picking up. Lots of big information coming to us. So to get into it, quick update on interest rates. Of course, we have seen that they are coming down. They have been coming down. We expect them to continue to come down. Right now, we're looking at national average roughly, 6.13, and fluctuating in that range. As always, disclaimer, not really accounting for who's paying how many points in that number, but that's just kind of what we're seeing, as an average of what people are doing. So discount points, buy it down lower, or in that range, not paying points takes it higher. So just depends on what your client wants when we start talking to them, what they want for their monthly payment, cash to close, different rate structures, all of that considered. That's what we're seeing. So obviously they're down. This is a good thing. We were talking about national averages in, the 7.5 range, not long ago. So big moves. What we're going to see here in the next couple of days. Okay. So we're going to talk about the Fed for a little bit. Okay. All right. So the Fed. Now, on Wednesday, on the 18th, we're going to have the Fed meeting. This is what we've been looking for. We've been expecting it. The expectation is that the Federal Reserve is going to cut short-term interest rates by 0.25%, maybe a half, maybe 0.75. Nobody really knows, but the expectation is almost 100%, at least 0.25%. So what does that actually mean? When the Fed cuts their rates, that is a short-term rate that is going to directly affect your car loans, credit card payments, short-term rates, okay? Now, in general, when the Fed cuts rates, that is inflationary, and that's bad for mortgage rates. So if you look at historical, the way that works, that relationship, technically mortgage rates should go up on Wednesday, but we're not expecting that. And the reason for that is what they're saying and what they're doing with their policies that are going to continue to bring down interest rates on the mortgage side, because what they were doing with their policies, not so much interest rates, is what caused interest rates on the mortgage side to start going up to begin with. So what they say, what their expectation is, and their outlook for the economy and inflation numbers is what we're expecting to help interest rates come down. And the reports that we got this week, the PCE, the PPI and CPI numbers, they came in a little bit higher than expectations, but there were some downward revisions as well. So overall, year over year, the inflation numbers are still coming down. And that's what's helping mortgage rates as well, because inflation has come down significantly. So we should continue to see that through this week, next week, and really through the end of the year and into next year as well, which is where the expectation of some of these interest rates coming down a little bit further. It's going to take a while, of course, but we've seen the big moves, and in the future, we could see interest rates continue to come down a little bit more. So all good things for mortgage rates and the real estate market, okay? The next part of that is going to be the PCE report that comes out on the 27th, I believe. 27th, yeah, it's the 27th. So that report, when that comes out, that's the Fed's favorite measure of inflation, and ideally, that number is going to continue to show inflation coming under control, and the Fed's going to continue doing what they're doing, which will help interest rates, again, long term, continue to come down. So again, all good things there, okay? Now, a couple of things for the real estate market. So some really good information for housing, okay? And we know that there is a housing shortage, and everybody's saying, well, let's see when the market crashes, right? Or the market's got to correct at some point, right? The numbers that we have just don't really support that. They support home appreciation over time, that, even the economy, if it goes into a recession, all of those things all still point to higher home prices. And that's not necessarily good for inflation numbers and the shelter costs and all of that. But for housing, home should still appreciate, right? The other part of that is when they say how bad things are, right? And they want to compare, well, the massive increase in home values from one day to the next to the year over year and so on. Compare that. Everyone wants to compare it to 2008, let's say. But there's one really big difference in the equity position that we have. So right now we have about $40 trillion in overall equity in housing. Okay. That comes out to about 315,000. Now that's an average number, of course, but 315,000 in equity per homeowner in the United States, right? To compare that to 2008, that was actually where we're looking at equity position. Right now, only 1.7% of homes have negative equity. So we bought a home at a high point and now it's actually lower, right? That's 1.7%. 2008, that was 25%. So a quarter of all homes had negative equity in 2008. So we're not really comparing the same thing when we're looking at different housing markets and the increase in appreciation, house prices, and a correction to the market, all of those things. We're not comparing apples to apples. This is not 2008. Maybe we have, a correction or slowdown or home appreciation slowing, that kind of deal. But these numbers are just one in many that we've given to you that still suggest homes appreciating and us not having a big downturn or crash in housing. Okay. So still good information to give out to your home buyers and homeowners. Of course, if they're waiting, there's no point in waiting, right? Interest rates are down. Home prices are going to continue to appreciate. Now is the time. It's always now is the time, but people just kind of get in their own way a little bit and don't want to accept that, interest rates are a little bit higher right now, but there are options. It's still a good investment and so on. It's hard to get through that part when you're talking about somebody's money, but all of these reports and information always show that buying a house is a good move, right? You're always, not always, but you're going to get the equity, you're going to get appreciation, and it's not going to be a straight line, but it's still a good investment over time, right? So I hope you guys find this information useful. If you need anything over the weekend, feel free to give us a call. You can reach me or my team at 214-441-7496, and we'll come back to you guys a little bit more consistently now that we're seeing some more changes coming and market information, and we'll probably have another video out for you and some more information once we have the Fed decision. We see what happens with interest rates on Wednesday, or if nothing really happens, maybe it'll be Friday, but we'll see if things move a lot or just basically stay the same. So hope you guys have a great one, and we'll talk to you again soon.